I'm Matt Bichardt here in Los Angeles for REIT World 2019, NAREIT's annual conference. Joining me today is Paul McDermott, President and CEO of WashREIT. Paul, thanks so much for joining us.
Sure, Matt. Thanks for having me.
Now, your company's just completed a $1.1 billion strategic capital recycling out of retail assets and into multifamily. Can you talk a little bit about that strategy and what impact it's had?
Sure, Matt. So our goal when we laid out our 2019 capital recycling was really twofold. First and foremost, we wanted to improve our NOI trajectory and our FAD growth for the near and long term. And then secondly, it's a classic portfolio management. We wanted to alleviate the leasing and the credit risk. So we really attacked it from two fronts. First, on the multifamily side, we did our largest multifamily transaction, I believe, in the company's history. And we stayed to kind of what we know, tried and true, is we really went after one of the biggest pain points. I mean, you know our region. One of the biggest pain points in our region is affordability. And we target something that we like to call the affordability gap, and that is the difference between Class A and Class B, rent spreads. And that traditionally, I think we look for something in the $300 to $350 range. And then on the flip side, our retail, that was really the, one of the smaller components of our portfolio. And we managed to sell off 90% of our, retail leasing NOI that we had exposure to this past summer, and 75% of the total NOI. But that was a significant de-risking, including getting rid of the big boxes. And so for us, we step back and look at that, and it's like, okay, we definitely stabilized the portfolio. We did some significant de-risking, and we did it at less than 100 basis points differential between exiting the retail and buying the multifamily. So definitely think we've set ourselves up for some value creation opportunities moving forward.
Now, as you look out the next couple of years, do you expect to continue to allocate more capital to your multifamily portfolio?
We love, when I got here, multifamily was a very small percentage of our portfolio, obviously, and we really like the demographics. We're driven by research, and I think research would prove out that there is going to be a continual need for housing in this country, particularly in our region. There is a need for affordable housing, and I think we're addressing that. But when I look at multifamily on a relative basis to the other asset classes, that we've owned and operated, it has a good long-term demographic outlook. It has a very stabilized income outlook, and when I look at it in terms of recurring CapEx, we like the multifamily space. So yes, we'll continue to allocate capital there as long as we continue to see the value drivers that we're seeing today. But for at least the next 5+ years, we see those demographics very well intact.
And lastly, I'm going to put you on the spot a little bit. If you had to narrow it down for WashREIT, one primary growth driver or opportunity going forward, what would that be?
Just one, Matt? Well, look, if we were talking this time last year, we knew we were going into 2019 with some significant commercial leasing challenges. And we were very transparent about that with the market. And we filed a K and said, hey, these are some pretty significant expirations coming up. This year has probably been our most successful leasing year. We've addressed 80% of those leasing expirations on the commercial front, 90% of the ones that were going in 2019. And so we're going into 2020. The first quarter is the inflection point, and then we like our path after that. The commercial leasing and all the back-breaking efforts we put in this year are really going to be one of the primary drivers for 2020 and going forward. But in addition to that, I can't ignore the capital that we're allocating to multifamily, because our renovation pipeline on our units is 3,300 units. Big value driver for WashREIT. Then when I talked about some of those additional FAR opportunities that we had going forward, the Trove delivered in the fourth quarter this year. We'll be leasing all next year. I think it contributes 1 penny in 2020, but 8 cents in 2021. Then we have the Riverside behind that coming up now that we'll be looking at in 2020. And then we have some other additional densification opportunities already embedded in the portfolio, both in the multifamily and the remaining retail space that we have. So I like our prospects going forward for delivering value to our shareholders.
Paul, thank you so much for joining us.
Matt, it's always a pleasure. Thank you.
For more from REIT World 2019, be sure to visit NAREIT's website, REIT.com.